Welcome back, and joining us for more on the day's market action is Reko Nare from Anchor Capital. Thank you so much for your time, Reko. So much is happening in the markets. It is really a nice day to be a watcher of the markets. Let's start off with the Trump tariffs. From an investor's point of view, how far can the impact of Trump's tariffs go?
Hi, Zinati. Thanks so much for having me. Hello to your viewers. So, of course, today the big talking point was Donald Trump and the announcement around those tariffs, specifically on Mexico, Canada, and China. Those are effective as of tomorrow. So the question is, what does those tariffs look like? It's a 25% tariff on imports into the U.S. from Mexico, and most of products coming from Canada, and then of course a 10% tariff on Chinese goods over and above what's currently levied on China. The reason Donald Trump is saying that it's in order to stop the flow of fentanyl, which is of course a dangerous opioid and drug, into their country, and then of course to stem illegal migration. And then, of course, you saw, in your question of how far can it go, and the potential impact that we've seen so far. We've seen Canadian oil also get taxed 10%. So, of course, that affecting energy and more expected in mid-February. So, of course, the energy sector most likely being impacted by that. And then, of course, you had Canada then coming out along with Mexico, basically just to retaliating in the form of a 25% counter tariff from Canada on about $155 billion worth of U.S. goods. And then Mexico announcing that they've got their own plans to announce countermeasures. And then, of course, China saying that they will challenge Donald Trump at the World Trade Organization. Why does it matter, Zinati? It really matters because if you think about the fact that Mexico and Canada are America's top trading partners. So these tariffs in themselves will most likely cause ripples, and they already have in the sense of markets, but essentially cause ripples through the global supply chain. And then, of course, we're likely to see that continued impact into the energy sectors and into the manufacturing sectors going forward.
And is Trump really the eye of the storm for the rand as well? Because, of course, we'd gotten used to, I think, over the last week or 2 weeks, the rand being at 18 rand 50, 18 rand 45. Now it's at about 18 rand 75. I mean, looking at these tariffs, but also the fact that he has said that the U.S. will stop providing aid to South Africa, on top of South Africa not being particularly painted in a good light, considering its role in BRICS.
Yeah, Zinati. So we did see today on the back of that. So if you think of the overall emerging market story, and then think about the fact that Donald Trump then singled out South Africa specifically over our expropriation laws. But yeah, we did see the South African markets as a whole, whether you're talking about the rand, whether you're talking about stocks, whether you're talking about government bonds coming under pressure today. So that could be an overall EM story, but also could be the fact that, once again, as I said, that we've been pointed out. But if you just zoom into the currency and the way the currency traded, if you think of a rand that closed Friday last week at about 18 rand 50 something, and then of course dropping nearly 2% at its worst today at an intraday low, close to about 19 rand or 18 rand 99 cents, but then managing to recover in the sort of afternoon session, closing down in the end about 1%, which is about like 18 rand 85 cents to the US dollar. But yeah, definitely a big part of that will be the fact that we've been singled out, but another part of that will be the fact that we've seen an overall move stronger in the dollar. Here specifically, just talking to the dollar index, just surging up by about 1.28% to about 109 points, if you will.
Well, Reko, the nice thing about the investment landscape is that you can always find pockets of safety, and we are seeing people flocking to a lot of companies that released their trading updates today. Let's start off with Harmony Gold, and I can imagine, of course, that the gold price has also been boosted by the geopolitical tensions that have accelerated. They did bring us an interim update today. Gold miner once again using words like stellar, exceptional, exceeding to describe their operational performance. Is Harmony does it stand to gain the most here in the gold sector, considering the boost that it is getting from the gold price, but also their excellent operational performance?
Yeah, so very colorful language that's been used there. One comment that I took away from that was a reassuring operational update and solid production. But yeah, all in all, as you've highlighted, Zinati, I think, one part is, of course, the gold price coming to underpin that and coming to support that story. But, we also have to take our hats off for management. They continue to impress consistently. And consistently exceed expectations for all the right reasons. But yeah, essentially that operational updates just highlighting solid production and all in sustaining costs within guidance, and then better than expected grades of gold coming out of Harmony. But essentially, yeah, we saw today, investors come and support that story, up about 2.8%, or about 2.1% actually in today's trading session. Year to date, and this is a number that I had to circle back to. Year to date, you've got Harmony up about 45%. If you think since the beginning of the year, that's massive. So yeah, definitely a story of the gold price underpinning that, and of course a decent management team at the helm there.
Yeah, well, talking about massive, but on the other side of the spectrum, we did see a massive drop in Merafe Resources share price, down 20%. Reko, they gave us an update on the smelting operations. What did you take out from that?
Yeah, so of course, the big takeaway there was that Merafe would be then part of their business would be then going under a business review, and saying that within that trading statement that there's a business review underway. And essentially what that statement highlighted was that Merafe, in partnership with Glencore, is conducting a strategic review specifically of its ferrochrome smelting operations. And essentially they're doing that in order to address the ongoing market challenges. So of course, what does that potentially signal to investors? Well, it potentially signals that there is a chance that there would be a potential suspension of their furnace and their operations, and specifically their ferrochrome smelting operations, and that of course causing some concern. And we saw the share price, move as much as 22% negative today. But yeah, they basically said that that's on the back of sustained pressure in global ferrochrome markets in general, and then certain furnaces may be suspended from May 2025. So yeah, investors not enjoying that, but they did come out and say that they're actively working with all the different stakeholders here, talking about regulators, labor unions, to see kind of where they can explore cost-saving measures.
Yeah. All right, before we go to your stock pick, Reko, let's talk about Vodacom. Also, that share price surging about 5%, almost 5%. The CEO there in that update speaking of a resilient operational performance, even in the face of some headwinds, including currency challenges there. Also giving us an update on their stance of the massive deal. Are things looking brighter for Vodacom?
Yeah, so I think it's a big business, isn't it? You think of that South Africa's largest telecommunications company, if you think of it from a market cap perspective. But yeah, as you highlighted, I think from our side, I think we see it as a slight beat, if you will.
Okay.
If you think of group services revenue coming in at 30.7 billion versus what the company already guided to, which is 30.3 billion. So yeah, there's a slight beat, but they have said, and I think you said it right there in the intro, they have said that they have seen some strong performance out of South Africa, out of Egypt, which continues to be the golden boy, and yeah, that contributing to the beat. But they have also cited, and I think it is important for investors to also qualify that they have also cited that Mozambique and the continued unrest there is a headwind. So yeah, but I think I think that 4.6% that we saw positive and the 13% year to date move is valid.
All right. Well, let's take a look at your stock pick for today. What are you choosing?
Yeah, so I thought long and hard about this because there's a lot to think about, long and hard. But essentially, we've highlighted as anchor that, what we're looking for going into 2025. We like self-help, we like boring, if you will, investments, just due to the macroeconomic uncertainty and volatility that we are sitting in and will most likely sit in 2025. So we're looking for total return investments and self-help stories. So for that, we are looking no further than the South African banks. Maybe a bit of context here. South African banks, in general, they've delivered about 10% earnings growth in 2024. Definitely benefited from the stabilization that we've seen, or beginning to see within interest rates, and of course they've got clean loan books. So for that, we're also then zooming into Absa of the South African banks. Why do we like Absa? You're looking at an 8 times price to earnings, sitting with a 7.4% dividend yield. So for us, we think that offers a very strong value in a very volatile macroeconomic environment with decent upside. And that upside for us kind of looks like about 16% with a target price of about 213 from the current level.
All right. Well, thank you so much for your time and for your insights there on what has been moving investors' money today. That was Reko Nare from Anchor Capital.